Well, good afternoon, everybody. This is Ron Wheeler, and I'd like to welcome you to our investing challenge tonight. Make consistent income with one trade. And let me get back over to my proper slide. So, I want to welcome you again. We only do this challenge once a year, so we're kind of excited to get it started again. And ultimately, it is all based on the fact that you need a way to generate consistent income. Now, generating income is critical to retiring with a peace of mind. It gives you the ability to be independent, not rely on others because you'll have that income for life. And without an income source, you might even find that you can retire younger than you originally planned. So, throughout the income challenge, we're going to work closely with you. So, by the end, you will have placed your first income trade. And ideally, it will be the first of many. Now, here's what we're going to do today. First, we're going to discuss what is the challenge that's put right in front of us here. Okay. After that, I feel it's important to discuss the benefits of completing the challenge. So, in other words, why is this so important to you? Then we're going to spend a good amount of time looking at the trade you're going to learn to use to generate income. And we'll finish up by looking at what you need to do to get started so you can start generating income in about a week from now. So, does that sound good? All right, let's get to it. Let's talk about the challenge. What exactly is the challenge put in front of you? Well, to put it very simply, you're challenged to learn an income trade and then place the trade within a span of a week and a half. And here's how we're going to do it. All of the training is available for you immediately. Okay. The videos, all of them, take less than an hour to watch. So you can get through all the training in just about an hour. It's not that difficult, it's not that intensive. In addition to the recorded training, again, you're going to get access to that right away. We're going to hold live training sessions each day for 4 days starting next week. Tuesday, Wednesday, Thursday, Friday, 11 a.m. Eastern Time. Again, if you can't view the live training sessions, it's not a big deal because everything is pre recorded. Okay. So, again, you can learn the trade in about an hour from the pre recorded sessions. But again, we want to be there live also in case you have questions or need any help. The first half of each live session, they last about an hour. Okay. The first half is dedicated to the training. So I'll go through the slides with you, a part of the slides every day, and then we'll open it up at the second half for questions and answers. If you can't make the live session, that's okay. Again, simply watch the pre-recorded training videos. Then the following Monday, September 29th, we're going to place a live trade with you. You can follow along with us click by click. Now, before I kind of get into this, the income challenge involves learning an option trade. So I would like to do a quick survey just to get a feel for your options experience. So give me a second here. I'm going to go ahead and give you guys a poll, and I'll give you about 30 seconds or so to answer it. Just in the poll, you're going to see a survey. So we just want you to rate your options experience. Number one, if you're brand new. Two, if you're a beginner, that means you've done a call or a put. Three, intermediate, like you've done covered calls. Maybe you've done some credit spreads. And then four, you've got several multi-leg trades. Maybe you do iron condors, calendars, all kinds of crazy stuff like I do. All right. Now, while you're answering those questions, I want to talk about a little bit about this. Several years ago, my teammate Brian, he's going to be with me in the Q&A at the end. He showed his 14-year-old daughter at the time, she's older now, but how to do the trade. And she was able to follow along click by click with the directions he gave her. I'm confident if that we can show a 14-year-old how to do it, you can do it as well. Okay. And, kind of looking at the responses of the poll, I'm going to say that, it's kind of what I expect. Most of you are in the beginner to an intermediate phase, a lower portion advanced, and kind of a little bit higher portion brand new to options. Okay, so that's pretty much what I expect from any real data set. In fact, I did this yesterday. I'm going to share it with you later too. I'll kind of go back to that poll example. All right, now before we get into the details of the trade, I think it's important to discuss why you should take the challenge in the first place. So, in other words, what are the benefits of completing the challenge? Because if there's not any benefits, then why do it in the first place, right? So, see if any of these benefits would help you. So, first, learning this income trade will provide you with income for life. At some point, you're going to stop working, and it'll be a huge benefit to have a way to continue to generate income for yourself. The trades you're going to learn in the income challenge has historically averaged about 2.5% per month. Now, keep in mind, that's been through up markets and down markets, through stable markets, through volatile markets. No matter what the markets are, this trade can be placed. The second benefit is that you can do this trade with as little as $5,000 in your trading account. So the barrier to entry is very small. It's virtually non-existent. On the flip side, if you do have a larger account, you can also place this trade. Now, benefit number 3 is you can make some serious money very quickly. For example, if you did start with that $5,000, did you realize that a 2.5% gain per month compounded over 15 years puts you at over $400,000? Now, if you started with 25,000, you'd be near half a million after only 10 years. You're looking at some very serious money. Now, the fourth benefit is the trade you're going to learn is very consistent. Historically, we've been right around 60%. That's over about 10 years. So many people struggle with consistency. They lose more times than they win. A lot of times it's just because they're trying to hit that big winner. And when you try to go for the big winner, it's kind of like playing the Powerball, right? Somebody is going to win. In fact, the last big Powerball jackpot, 2 people won, but hundreds of millions did not, including this guy right here. The income challenge teaches you a system where you're making solid gains consistently. Small wins, small losses with a higher success rate. That equals big gains over time. Now, you're going to have streaks where you exceed 60% winning trades. One of our students, Larry, learned the SPX paycheck system last year. We checked in on him a few months ago to see how things were going. And he said, trading has continued to go very well. Since the beginning, my stats are 22 wins and 2 losses. Average of 4.8 contracts per trade, average gain of about 500 per trade, average duration 6.5 days, and he made a total gain of $10,950, starting with a $30,000 account. That's pretty good return. That's 30%. So Larry started off the year with 91% winning trades. Plus, he already started to see some serious money from it. Now, the fifth and sixth benefits we put together. First is the minimal time it takes you to do the trade each week. I'm not exaggerating when I say you can spend a total of 15 minutes per week on this income trade. That's the start. Once you get the hang of this, you can knock this down to 5. Second, it takes minimal effort to do this. Like I said, Brian taught this to his 14-year-old daughter. There's simple rules that require no guesswork. There's no, if the market does this, then you got to do this. But if it does that, everything is like binary, 0 and 1, black and white. I come from a computer science background, right? I like finite things. It's either yes or it's no. It's either on or it's off. It's either a 0 or a 1. So that's the way I do my trades. Okay, there's no ambiguity, there's no subjectivity. Just do it based on the rules. Now, the last benefit, number 7, is that you can get started right away. Because the process is so well established, written down, rule based, you'll be able to place that trade in 1 week's time. Now, let me ask you a question in the chat. In the chat, type in there for me. Let me know if any of these benefits would be good for you. Which ones? And if so, how many of them? Maybe one's good for you too. Maybe all of them are good for you. I'm just kind of curious to see where you guys are in the benefit analysis, which means I need to pull my question box out here so I can actually see. There we go. I see David, you say number 3, serious money quickly. I like it. All of them are great. Benita, Tom, all of them. Number 3, number 1, 2, and 3. I like it. Looks good. All right, cool. A lot of them are saying all of them. I love it. Yeah, I mean, they're all ultimately good. Richard, you mentioned consistency. So again, a lot of benefits from the course. All right, let's talk about the trade itself. Today, we're going to spend a good amount of time teaching you how this trade works. We want you to feel totally comfortable with the trade before you decide to join us in the challenge. Now, let me introduce myself first. My name again is Ron Wheeler. I run the Ultimate Retirement Solution Coaching Group here at VectorVest. And in that group, we do nothing but options trades. We don't trade stocks. We do nothing but options trades. And this strategy that I'm showing you tonight is one of the cores that we do in our Ultimate Retirement Solution Group. Now, I've been trading for 28 years now. I've been doing this a long time. I've been kind of into options for the last probably 12 to 15 years. Nothing but options. Occasionally I do some other stuff, but mainly what I do is options. And in doing that, about 10 years ago here at VectorVest, I put together a course called the Options Paycheck. And that taught the option trade called a credit spread. And the goal of that course was to teach investors a way to generate consistent income. That's why we call it the paycheck. It's been wildly popular. One of the coolest things, though, we did was we took the techniques taught in that course and we simplified it even more. That way, you could get the benefits of the income system, but get results very, very quickly. And today, I want to teach you how that system works. Now, what we did is we took the options paycheck system and we broke it down into a simple system. And this is a trade that I've been doing for the last really 15 plus years. And I taught this originally as kind of a bonus to the options paycheck system. But what happened is we had a lot of our clients say, man, I just started around with your SPX trade and wow, I got off to a quick start and everything was great. And it kind of worked me into doing all the other things. Now, this super simple system, think of it like 5 ones. It uses one ticker symbol, one trade type, one entry rule, one profit rule, one stop criteria, and that allowed us to take anyone, regardless of experience, and show them how to successfully place an income trade. We call it the SPX paycheck. So let's look at how this works. And before we get into it, I want to say this. It's perfectly okay if you don't understand everything that you see right now. There might be some things along the way that you don't understand, and that's okay. Some of you who trade options may understand all of it, but if you don't worry. You don't need to understand it right off the bat. Now, everybody should understand this. The stock market has trends. When the market goes up, most stocks go up. When the market goes down, most stocks go down, right? Well, we believe, and our results, and even my own trading, I've been doing this again for like 28 years. You don't fight the trends. The trends are what pay you, okay? That's where you make all the money. So we're big believers in the philosophy of riding the market wave, riding the wave of the trend. Go with the flow of the market. Don't swim upstream, right? Go with the flow. Because history has shown that the market continues in the direction of the trend for some time, and then a new trend will ultimately form. Now, let's look at probability, because probability is a big thing that we do for the paycheck and for any income approach. The idea of probability is setting a trade up so statistically it should work in your favor. And it all starts with what you basically see right here. If you remember the bell curve, if you take a huge data set, you'll see that most of the data is around the middle. And then a smaller amount of data is out to the sides. Remember this from school? You know, I'm grading on the bell curve. All the students that got D's and F's were like, awesome. The A students were mad. But the C and B students were like, whatever, right? Because y'all get stuck in the middle. Now, I showed you guys I would show you something pretty cool. Yeah, you might have to zoom into this because you might have to do that. But take a look at this. When I posted that poll earlier, take a look. I don't know if you guys can see this. It's not coming up on my screen. So let me take a screenshot of it. Bear with me a second. Because again, there's nothing better than like real life data, right? To show you kind of how data works. There you go. When I asked you guys the question about rating your options experience, I want you to take a look at how the data came out. The bell curve. Out of all of you, most of you were in the beginner to intermediate level. A smaller section brand new, and an even smaller section was advanced. The bell curve, okay? That's how data works. And this is what we're going to use as a way to get ourselves a good probable trade. Now, let's kind of dive into this a little bit more. We've got the market, in this case, the SPX. During a market uptrend, most stocks tend to go higher anyway, right? So you're going to be placing bullish trades. Now, how can you increase the probability of success? Well, that white dot represents the price of the S&P right now. Well, again, just it's a figure, right? Probability says that a stock has a 50% chance of going up and a 50% chance of going down. If that's the case, the more room you give it to the downside, you're increasing the area the stock is likely to be in the future. And you can see here, the stock is more likely to be in the green area because it's no longer a 50-50 scenario. Okay? What you're ultimately doing is you're placing the trade on the outside of the bell curve. All right? The market's more likely to be in here, so we're going on the outside of it. So we have a big area to where it normally would go. So let's put some numbers to this. If I choose a price a little bit below the current price of the S&P, instead of a 50-50 scenario, you most likely now have an area where the stock has a 65% likelihood of being in and a 35% likelihood of not being in. You can lower the percentage even more and thus change the percentages. For example, over on the right, you can set up a scenario where you have an 80% likelihood of winning and only a 20% likelihood of not winning. Because remember, here's the market. Here's the range that you have to make money. If it goes up, you win. Sideways, you win. Down, you win. You're giving the trade a lot of area to work so you can be right. Now, in a downtrend, the thinking is just the same. It's just flipped around. You're going to be bearish on the S&P or the stocks in general because most stocks move lower during market downtrends. Since some stocks have a 50-50 probability of going higher or lower, how do you increase it? You increase it by picking a price. We think the market's going to go down. We pick a price above the market, okay? Because now you have the ability to make money as long as you stay in the green area. And to stay in the green area, the market can go down, it can go sideways, or it can even come up some in that same area. And you can set up the probabilities as before. Probability will change depending on how much room you give the stock to move. Okay, so we only give it a little bit of room here, we give ourselves a 65% chance of winning. We give it a lot more room, we have an 80% chance of winning. Now, the SPX paycheck originally has two trades to work from. One starts with about 65% probability and the other starts with about an 80% probability. Now, during the income challenge, we're going to teach you the trade with a 65% probability. And you might be thinking to yourself, well, Ron, why not the 80? That makes more sense, right? Wouldn't I have a greater chance of winning? Well, that's true. But there's a little more involved in managing that one. That's not a 15-minute a week trade. That's a trade that you're going to have to keep an eye on every single day and also make repairs on an option spread if you're wrong. So it's not a trade that a lot of people have good success with right off the bat. It's something that they do after they get more knowledge of options. Now, to be fair, this is the trade over here on the right that I traded for a very long time. I made the transition a couple of years ago trading the 65% trade because, like a lot of traders, I wanted simplicity. I even want to trade where I don't have to do a lot of work on. And that 65% trade became my go-to because it was very easy to do. So even I kind of moved over to that one over the last couple of years. And again, you know, whether it's bullish or bearish like this, we still have that same 65-80 trade style. All right, let's talk about how the trade is set up. Now, as I said before, it's okay if you don't understand all this right now because you don't need to understand all of it. What I'm going to do next is I'm going to use some slides actually from the income challenge course. So when the market is bullish, we are going to use puts in our trade. There's two types of options. There's calls and there's puts. When the market is bullish, we're going to use puts. And the way the trade is set up is this. You are going to sell a put with a strike price below the current market price. So for example, and this is not like telling you what to do. Let's say the S&P was at 6,600. I might go down to a 65 or a 6450 or something like that. Market's at 6,500. I might go down to like 6450 and sell a put. Then I'm going to go down even further and I'm going to buy a put. And this is done in one transaction. We're doing this below the market's current price. Now that put that we buy, that's our insurance. It protects you. Number one, it limits the amount you can lose. That's what makes it a low risk trade. No matter how far down the S&P goes, you've locked yourself into a maximum loss, which by the way, in over 20 years of trading the S&P, I've never actually had that happen. So I'd throw that out there. It's never had a maximum loss. Okay. That insurance leg also gives you a little bit of profits if you're wrong in the trade. So there's a lot of benefits to buying that option. Now remember, this is done on the same order. The newly created spread has a price and it trades back and forth like a stock does. This is called a bull put credit spread. And I love the name of it because it's so easy, right? They obviously didn't have a marketing team that came up with options trades. Bull because you're bullish, puts because you use puts. Credit because when you take the trade, you get paid as a credit, right? They didn't have any marketing wizards on that one. We're very simple creatures here on the options world. Now, these are done as one trade. Now, when you do this trade, all right, it has a price. That price fluctuates up and down every day depending on what the market does. And we'll talk about how prices change here shortly. In a bearish trade, we're going to use calls. Okay, two types of options, puts and calls. When we're bullish, we're using puts. When we're bearish, we're using calls. Same idea, only we flip it. We go above the current price of the S&P and we sell a call. So again, let's say the S&P is 6,500. I might go up to like 6,580 or something, or 6,500. I might go up to like, 6,600 and sell a call. And I would go up even higher and I would buy a call in the same transaction, right? And that's the key. It's the same transaction. That buying the call, that's your insurance leg. It's going to protect you. It's going to make the trade cheaper. It's going to require less outlay. It's going to protect you if the market has a huge reversal. That's why we call it the insurance leg. Both of those, again, placed on the same order. That newly created spread will have a price. And again, just like the other one, it trades like a stock does. It can go up in price. It can go down in price every single day. You can enter on a Monday. You can exit on a Friday. Doesn't make a difference. It's like a stock. When you buy a stock, the price of your stock fluctuates, right? Well, when you do these credit spreads or these option spreads, it's the same thing. You get into the trade for a certain price, it fluctuates until you get out of the trade. This is called the bear call credit spread. And again, no marketing people were involved in this, right? Bear because you do it when it's bearish, calls because we use calls, credit because you get paid when you place the trade. Simple as that. So again, the bullish trade is the bull put, right? You sell a put below the market, you buy a put even further below. The bearish trade, the bear call, you sell a call above the market, you buy a call even further above that one. Now, let's talk about part 3, opening and closing the transaction. So here's how this works. Now, it works a little different than when you buy a stock or you buy a call or you buy a put as an option trader. In this example, in these trades, the money comes in first. So when you open up the trade, you are going to receive money into your trading account. You're going to get paid. When you close the trade, you're actually going to pay money out of the trading account. Okay? Whereas if you bought something, right, you pay for the trade up front, and then the broker, whoever they sell the position to, you get paid the difference on the way out. This is different. When you enter the trade, you're going to get paid up front. When you close the trade, you have to pay the broker some money back to close the trade. Okay? And the hope here is when you open the trade, you collect more than you pay when you close it. So that's how you can kind of see the dollar signs here. Now let's put some numbers behind it. Let's say when you open the trade, you get paid $2,500. My goal is to close the trade by paying back 50% of that. So when I open the trade, I get paid $2,500. When I close the trade, I would like to pay the broker $1,250. Then I keep the remaining $1,250. I make 50% profit. Okay? That's how a winning trade works. Now a losing trade is kind of like the opposite. When I open the trade, I get paid. But when I close the trade, I have to actually pay more than the broker paid me, and that results in a loss. So think about it in this way. When I open the trade, I get paid $2,500. The trade goes against me and I lose, I got to pay the broker $3,750 to close it. Now, the $2,500 that I'm giving them, that's what they gave me when I started the trade. So that's not really a loss. That's just money I have to give back. I have to dig into my pockets now for a little bit of money out of my account, and I lose ultimately $1,250 on the trade. Now, where do all these numbers come from? Let's talk about that. When you open the trade, where does the money come from? Well, when you sell the put, it's going to cost more, or it's going to have a higher price than the insurance. So when I sell the put, that's going to have a higher dollar amount. I'm going to get paid when I sell something. But when I buy something, I have to give some money back. That's going to be a lower price. Now remember, they're entered on the same order. So the newly created spread's price is the net between the two individual legs. So again, let me put some numbers to this. When we enter the trade, let's say we sell the put, and for selling that put, we get paid $3,500 up front. But then we got to go buy the insurance. The insurance cost me $1,000. So from that $3,500, I'm spending $1,000 on the insurance. I'm going to get paid when I open the trade $2,500. Okay? Now, the hope is that the S&P will move higher. Now, if the S&P moves higher, if anybody of you have traded puts before, whether you buy a put or sell a put, it makes no difference. If the market moves higher when you have a put, the value of the put goes down, right? Puts are basically something that you would do, like when you buy a put, if the market goes down and you buy a put, that's a good thing, right? So anytime the market goes up and you have a put, the premium price of the put is going to move lower. So S&P moves higher, the price of the puts decline. Now, that put that you sold has gone from 3,500, now it's only trading for 1,750 bucks, right? The put that you bought was trading for 1,000, now it's only trading for 500 bucks. Well, if I were to go out there and close the trade at those prices, if I look at this guy, I'm going to make $1,750. I sold that position originally when I opened the trade for $3,500. Now I can cover it at its latest trading price of $1,750 bucks. So I'm going to exit that trade and keep $1,750 of that. On the flip side, I bought the option for 1,000. Now it's only trading for 500. I'm going to lose $500. The net of that position means when I close the trade, I am going to pay the broker back $1,250 bucks. All right? Now, it's okay. You collected the $2,500 when you entered the trade. You paid $1,250 when you exited. You ultimately keep $1,250 of that trade. So that's how it works when you have a winning trade. The prices of the options decline. That's good. You make money. So in a bearish trade, ultimately it's the same thing. When you enter the trade, you're going to receive more money for the call that you sold than it cost to buy you the insurance. So when you place the trade, you're actually going to get paid for it. Okay. But remember, you're not just like selling something like, you sell on Facebook Marketplace and, you walk away from it. When you sell an option, you have a contract that you sold to somebody. You are the guarantor of that contract, right? It's like insurance. If I buy an insurance policy, the insurance company doesn't just collect my money and walk away. They're providing me with protection for the asset. Now, if the protection's not needed, they keep the premium and they walk away, right? Well, in this trade, we're not going to do that. We're going to exit the trade at a lower price, hopefully. So, taking a look at this again. When we sell the call, we are going to get paid a lot more than we have to pay for the insurance. So in this case, let's say when we sold the call, we're going to get paid $5,000. We're going to use 2,000 of that for our insurance. That means when we open the trade, we're going to collect $3,000. Now, hopefully in a perfect world, the S&P moves lower because that's the idea. And what happens is both of those premiums are going to decline. Now, when you sold something and the price of it declines, that's good for you. You sold it for 5,000. Now you can exchange that contract, close it out with somebody else for the new trading price of 2,500. You just collected 2,500 bucks. That's awesome. The option that you bought for 2,000, however, is now only trading for 1,000. When you exit that, you're going to lose 1,000 bucks. So the net of it is, when you enter the trade, you collect 3,000. You close the trade by paying back 1,500 of that, and you keep the $1,500. That's how a trade makes money. Okay? That's how that works. And again, if you don't completely understand all that right now, it's not a big deal. All right? There's lots of training on this, but that's kind of how it all works together. So what we just looked at is really the first part of what you would learn during the income challenge. Now, as you can see, there's more steps for us to cover, such as how you control your risk, what do you trade, when do you trade it, how do you set the trade up, how do you manage the trade. Of course, we'll also go over how to enter the trade later on too. Now, let's talk about how to get started. We put together the Investing Income Challenge to help you place your first of hopefully very many income trades, and here's how we're going to do it. As soon as you register, you're going to receive immediate access to a series of training videos that are going to walk you through the trade. We're also going to hold live training sessions each day for 4 days. That starts next week, the 23rd. And those sessions are at 11 o'clock in the morning. They're not going to take any more than an hour. As we talked about earlier, the first half is dedicated to the training. The second half is open for Q&A. Okay? The following Monday, the 29th, we're going to place our first trade with you. And again, you can follow along with that click by click or just kind of watch the process in real time. And as an extra bonus, after you place that first trade, we're going to continue to work with you during the month of October. So every Monday, we'll walk you through setting up and placing an income trade during a live webinar. Then we're going to get together live again at the end of the week to check in with you, answer any questions. We'll talk about the trade. We're going to make sure that you're still on track. So here's the opportunity. If you're ready for the challenge, it's only $2.95, and I'll take you by the hand, help you place that first income trade. So all you got to do to get started is go to www.vectorvest.com/join-challenge, and we'll put that link in the chat box for you to click on. Together, we're going to do this in a series of about a week and a half. We're going to get you started with that first income trade. And here's a guarantee for you. We believe so much that you're going to love this income system that you'll complete the challenge. We offer a 100% money back guarantee. You can go through the entire challenge, and if you're not satisfied, you can get your money back. It's completely no risk to you. We only want people to join the challenge if they're serious and excited to get started. We hope that you're one of them. Now, we've worked with so many people over the years who came with us with a variety of experience in the past. Here's just a handful. When Jim came to us, he was inconsistent and unsatisfied with his results. He learned the system, and his first 21 trades were winners. Mike, when he came to us, he said he lost off and it got to the point where he almost gave up. But then he learned the system, made about 12 grand his first 4 months. Mark had no experience at all with income trades. We taught it to him. After an hour, he was able to place his first income trade by himself the next day, okay, in just 10 minutes. We taught it to him. The next day, he did it by himself. Brian, you're going to hear from him later. He showed his daughter, who I'm sure doesn't look like that anymore. She's older now. She was able to take notes from her spiral bound notebook and place the trades by herself using his account. So during the income challenge, we do these trades with you. We're going to make sure we're standing over your shoulder getting this done. Now, here's a couple just comments that we've got from them. Want to thank Ron for teaching me the method to create monthly income. I'm new to options and I wish I took the course sooner. I finished the June course, managed to make 3% of my trades for the month of July. I've learned a lot following the markets daily, being able to watch how volatility affects the spreads. Also looking forward to try the spreads as others have to make some non-paycheck trades. We get posts like this all the time. Dan got a notification from Thinkorswim saying he has trade exit with profits. He says another win following Ron's rules. Terry Knighton also had their trades closed as a profit. Nav posted that since he started paper trading, he's at 75% winning trades with a profit of 575. Now, a couple important notes here. 65% probability is the baseline, but you're going to have streaks where it's going to be a lot greater than that, but you might also have some streaks where it's going to be lower than that. We teach you how to use market direction, and that's really the secret weapon here that's going to put that probability in your corner. Varney said he had 18 out of 20 trades. That's 90%. Gerald emails and said, place the SPX 35 trade on 5/9/24, close for profits the next day. Paid for the course with one trade. Made several before that. Just wanted to share and say thank you. Here, I posted that my trade closed. Once again, others joined the conversations. Bruce said he made $4,600 on the trade. So you can scale this trade up. You can scale it down. All of these people we looked at today are not professionals. They're not financial advisors, they're not money managers. They're just ordinary people like you and me. Some had no experience at all. This is not some sales pitch. This is just reality. If you want income, this is the trade to learn. It's as simple as that. Now, here's my performance in 2025. I want you to keep in mind, at one point in April, the S&P was down about 15%. It currently sits at about 11% gain for the year. But our system already this year is up about 15%. Keep in mind that only involves about 10 to 15 minutes effort per week. Okay? But I also want you to realize how a real trading system works. You know, we started out the year pretty flat. Now, I wanted to spend a couple minutes with you guys and just talk about this. Trading systems that are real look like this. You're going to have periods where, you know, for the year, we actually started out a little bit down, but then we recovered. We had a little more drawdown. Then we finally broke into profits, kind of floundered around there for a little bit. And then finally we broke in to where the system was repeatable and working. That's what you have to do. You know, you can't take on a trade, and this is beyond the income challenge. This is something that's always pained me as a educator, as somebody that's been around the trading industry, and somebody that was very successful myself at trading with a system that I originally lost money using because I wasn't using it right. Okay? Not every trade is going to be a winner. Not every system is going to be constant gains month after month, week after week, right? You're going to see some peaks, you're going to see some valleys. But when you take it as a whole, you're going to make profits. And that's the key. So again, are you up for the challenge? Let us know. If you're up for the challenge, just give me a big yes in the chat box. Now I want you to think about this. The main goal is to make consistent, meaningful income. Is it achievable? Well, the answer is yes. You've seen us do that in real trading. Our test results have shown that, as well as our client testimonials over the last year since we started this. What's the likelihood that you'll achieve your goal? The answer to that is high. We've seen many people succeed who had no prior experience. What about the effort? That's pretty low. There's not a lot of work involved to learn and place this single trade. What about the sacrifice? That too is low. At first, you're dedicating about an hour a day for a week. Then you're doing that, though, to gain an income system that you're going to use the rest of your life. The risk? The risk is low. First, the investment's only $295. That's tremendous value. Plus, you have that money back guarantee. The trade you learn is set up in a way that all your losing trades will have minimal risk. What's the time commitment? That too is low. There's going to be some time dedicated to learn the system, but even that's only about an hour per day for a week. After that, you're looking at about 15 minutes per week. So at this point, you have a choice. You can choose to do absolutely nothing and stay where you are. Or number two, you can learn to generate income now. Of course, you can try to do it alone, and if you're willing to work hard, spend hours in front of your computer, and willing to learn by trial and error, you might be able to pull this off. By the way, that's how these SPX systems were born. I learned by trial and error, a ton of testing. Or you can let us guide you through the challenge. Let us show you how to do it. We'll walk you through each part of the system. Actually reminds me of one of my trading mentors. When I would ask him about something, I'm like, what about this? What about this? He's like, listen, I already put in the hours. I already put in the work. I created this. Just do what I do. You don't have to worry about it. Just do what I do and you'll be successful. I'm like, thumbs up from this guy. Okay. Circle September 26th on your calendar. Why? Because that is the day. I'm sorry, not September 26th, September 30th. Got my dates wrong. Circle September, I'm sorry, the 29th. I keep getting my dates wrong. I'm looking at the wrong calendar. September 29th, because that is the day that you're going to place that first trade. Are you going to do it? Or is it going to be a day you look back on and say, man, I wish I would have gotten started? And you got to ask yourself, what's it going to cost you not to do this? You know, we looked at the serious money that can be made. Would you exchange $295 one time right now to get that number every year? Sign up. Do it. If your answer is yes, then go to vectorvest.com/join challenge, get registered today. Now that $295 special is only available till tomorrow at 6 p.m. Eastern. After that, the price goes up to $495. And registration for the challenge is only open till Monday. So get signed up now. Remember, we start the live course next week on Tuesday. So get set up, get yourself with that special price. Just go to vectorvest.com/join challenge. Oh, by the way, if you're an alumni of the Options Paycheck course, you can register for this challenge for only 95 bucks. We sent you a private link via email, or just let us know in the chat. Okay. And hey, if it's right for you, let us know in the chat box. Just say yes, I'm signing up, or I'm in, something like that. Just to let us know, and we like to welcome you to the course as well. All right. With that, I'm going to bring my colleague Brian in, and he is going to lead us in a Q&A session.
Oh, I feel so important when you say I'm going to lead us in a discussion here. All right. So thanks for the reminders about all those deadlines, Ron. Yeah, we've got this is a quick turnaround because Ron starts training next week. The first class is Tuesday, so be sure to get in before then. The registration for everybody closes on Monday, so you only have a couple of days to decide. Like Ron said, it's only $295, and if you've taken the paycheck course, it's only $95. So, but if you've taken the paycheck course, you gotta let us know in the chat or call our team, and we'll get you a special link for that. But we put the link into the chat, vectorvest.com/join challenge. You can get in there. You get immediate access, so you can actually start going through the training today, as soon as you place the trade, and maybe go through all the materials. And you might even want to start placing your trades on Monday before Ron even does his first session, if you're a real go-getter, or you could just wait for him. All right, so Ron, a couple of questions that have come in. There's a few people who've taken the paycheck course. How would you describe the difference between what you're doing here and the paycheck course?
This is a simplified version of it that only applies to the S&P 500. So the Options Paycheck course is a big picture where you can apply the concept of credit spread trading and probability to stocks. And with stocks, there's a little bit more, I don't want to say complexity, but there's more of a rule base that you have to use. You got to look for market time. You got to find the right stock. You got to make sure there's a risk reward, and all the risk rewards on stocks are different. So you got to verify that. It's a little bit more a little bit more a little bit more steps involved there. So it takes a little bit longer to do those trades. What we've done here is we've taken all of that concept, we've brought it down to one example, the SPX. That way you don't have to search for stocks. You don't have to worry about risk reward because the trade has a clear-cut risk reward built in. It's just a much more simple way of doing income credit spreads on one symbol. So it's just a one symbol trade essentially that we've kind of broken down from our big picture income system using stocks.
Yep. And if you've taken the paycheck course recently, you'll notice the actual training videos are the bonus modules in the paycheck course. So the benefit for you of doing this again would be you get all these live sessions with Ron for the next month, where he'll just sit down with you and go through the trade and do the Q&A on Friday. And basically it's like 100% focused on this S&P trade and making sure that you are confident in doing this base trade. Because I mean, there's some people who just say all they want to do is the S&P trade.
Yep.
Right. All right. So another reminder, the $295 is good till tomorrow. VectorVest.com/join challenge. Registration closes for good on Monday at 5. So tomorrow the price goes up to $495. But the $295 is good for another was about 24 hours. I see somebody in the chat said that they accidentally purchased it for $295, but they qualified for the $95. I think that was you, Richard. Stephen in the chat should be able to help you out, or yes, to answer your question, if you contact our support.
Brian, somehow I think I lost your voice.
Oh, I wonder how long I was talking. What was the last thing you heard? I was
something about in the chat window. They were going to give you were going to give them in the chat.
Oh, well, how about this? I'll just say something to Richard. Contact Stephen in the chat if you paid $295, but you really qualified for the 95. So type it into the chat, and Stephen will help you, or you can call our office. And Ron, there was a question about time of day to place the trade. They want to know, do they have to be available on like Monday when you place the trade? to place their trade, or is this a trade that can be done at other times?
No, you can do this trade really anytime you want to. I do it on Mondays because it kind of fits my schedule. So I just do it then. But no, you can do these trades Monday, Tuesday, Wednesday, Thursday, Friday. It doesn't really make a difference at the end of the day. Any day is fine. Any time is fine. Morning, afternoon, doesn't make a difference in the grand scheme of things.
All right, there's a comment from Carmine, which actually I'm going to use the answer to that. I'm going to read what Carmine typed in to answer Enos, because Enos is saying, why isn't it better to do that 80% win rate trade? And Carmine was just randomly typed into the chat, having a trade with no repairs is really nice.
Yep.
So Ron, I'm going to let you answer Enos. So you showed a 65%. Now there's probability and there's win rate, but Enos wants to know, why isn't it better to do an 80% trade?
Well, it is. If you can handle the repairs that are necessary, the monitoring that's necessary, it's a lot more involved and a lot more in depth to do that trade. If you miss a repair, if you miss one of your alerts, you could have a pretty tremendous drawdown on that trade. So you got to be very, very careful. And like I said, it's a great trade. I used that trade for years and years and years, and it worked very, very well. I finally gave up on it, not because it wasn't working. It's because I didn't want to worry about repairing anymore. I didn't want to have to monitor it every day, make sure I was in front of all my alerts to make sure I didn't have to repair it. It was just easier to have a trade that didn't require repair. It either worked or it didn't. You're in or you're out. It made life better. And ultimately, the success rate and the success of the 65% trade had matched what the 85 or the 80% trade did. So there was really no more advantage of doing it because this trade actually had a higher rate of return overall.
All right. Well, we actually have I'm amazed at how many people typed in, how do I qualify for that $95 rate? Yeah, the way you qualify for the $95 rate is if you've purchased the options paycheck course in the past. We've been running that course since like 2016. And Khan, you typed into the chat, you asked that question. I remember your name from the paycheck course. So you should qualify. And then a few others. If you've taken the paycheck course, you qualify. Why is that? Well, because for reasons we just described earlier, the S&P trade that we're teaching here is actually a bonus module of the paycheck course. So you're basically just paying for the time with Ron, and it's actually not even, to say a whole month with Ron is only worth $95. That's almost a slap in the face to Ron. But I mean, that's all we're charging is $95, and you get a full month of like 8 live
so
sessions.
You've played
actually,
this cute
like 12
shell
live
game
sessions
where you say you
Ron,
can't release everything because
to go through this. But and the course is like $995 to join the paycheck course. So people have paid a lot of money to go through the paycheck. So we're saying, hey, as a thank you for that, it's $95 to go through this if you've paid for that options paycheck course. If not, it's $295. And I'll let you in on a little secret that we're going to be running the paycheck again in a couple of months. That we leave in the amount that you're paying here for the challenge. A big chunk of it we would use as a discount towards the options paycheck for the next launch that we're going to do here coming up in a couple months. So it's really worth it to go through this challenge with Ron. So it's vectorvest.com/join challenge. If you have questions, let us know in the chat, and we'll help you out. So let's see. Steven says, I don't understand who wouldn't want to make 2.5% a month. And remember, it's on average, Steven. So there's gonna, like Ron, I mean, you showed the chart.
Yeah.
There was like 3, it wasn't months, but it might have been a month total, but there were like 4 weeks or so that you had losing trades to start the beginning of the year.
Yep.
So the first month might have been negative, and then you slowly kind of recovered. And then you had a month there recently where I think you probably had 4 losing trades in a row.
Yep.
So there's going to be winning months and losing months, but like Ron said I remember there was one year you were up like 40%, I think, on just the S&P trades.
Yeah, and and when I've done the system, there's never been a losing year. Now like Brian said, I've had years where I was up 40, 45%. I've had years where I was only up 7 or 8% when it was all said and done. But the key is keeping these trades going is what gives you that long-term success rate. That's the beauty of it.
All right. And there's a question from Steven. He wants to know, are all the sessions recorded in case I have to be at work?
Yeah, we record them, don't we? I was going to ask you.
Yep.
Yeah.
Yep.
Yep. All the sessions are recorded. So, yep.
And the cool thing, Stephen, is you get like a double. You get all the pre-recorded lessons are pre-recorded, right? So that they're available immediately. Ron is going to teach them live too. So he's going to go through the same material, but do it live with you. And the cool thing about Ron doing it live next week is he's able to bring in kind of recent discussions about what's going on in the market, because some people are concerned about the Fed decision. Like, how does that affect the S&P? So he could talk about recent events and what's going on in the market right now. It doesn't change the rules of the system, but he's able to talk about those things in those live sessions. But it's going to be you're going to learn the same thing. It's recorded. You get the live sessions. All the live sessions are also recorded. And then next month, when Ron does the actual trades on Mondays, those are going to be recorded in case you missed them. The only thing I think Ron might have mentioned, but he's going to mention it again when he does those live sessions, is if you can't watch those trades until the next day or whenever, just keep in mind your trade that you do might be a little different because time has gone by. Like the price will change and the strikes might change. So just keep that in mind. But everything's, to answer your main question, everything is recorded and you have access to it in the course. All right. So David is saying, where's the chat box? Wherever you're typing, David, is the chat box. We see what you're typing in. So if you have questions, let us know. All of you who said that you're in, like Raymond, that one just popped in. So all of you who said you're in, you should have received an email with all the directions. So please check that out. It'll have all the links that you need, the dates, the times, everything will be in there, and you could hop into the course tonight and start going through it. And I think I'm looking through. Let me just double check because Ron's streaming on YouTube as well. Let me check over there to see if there's anything over there. Let's see. Let's see. Rodney says, Ron, I want to give it a try. Awesome. So just click on the link, Rodney. Okay. So this one is from Dylan. And then we also had another person from Australia. But Dylan says, is this something I can do in Canada? And there's another person who says, I live in Australia. So Ron, what would you say to people who live in a different country other than the US?
We do have clients that do this from different countries. Just obviously make sure that whatever broker you're using, you can trade the SPX in the US. And then I know in Canada they have like their RRSP accounts, their retirement accounts. You can't do it in something like that. But as long as you have an account that can trade the SPX, you should be able to do the trade. We have lots of Canadian clients that do this, and quite a few from Australia that we have in our lists.
All right, and then we had a question from BP. It says, let's see, he wants to know if he's a premium member of VectorVest. Is it the same price? Yeah, it's $295 for the course. Ron, can you still hear me okay?
Yep, I can hear you.
All right, cool. And so it's still $295 for the course. And like I said before, if you took the paycheck course, it's $95. So Ron, I think that's all the questions. So I'm gonna pass it over to you to pump everybody up, get everybody excited, and wrap up for the night.
All right, sounds good. Well, thank you all for joining us for this hour. I know time is precious, so I definitely appreciate yours. And I'm looking forward to those of you that are signing up to do this income challenge with me. It's a great little trade that you're going to pick up. It's a nice little side hustle to help you create some income. And again, it's something that we've done here at VectorVest, trading wise for the last decade. I've been doing it for about 15 years. So hopefully you can add it to your portfolio as well. So with that, I will bid you a fine good evening, and hopefully we'll see you all next week as we start the live income challenge. Take care, everybody.